Let's go to Scott Martin on this, Larry Glazer on this. It is rather remarkable, but sometimes you always worry, and full disclosure here, I am an Nvidia shareholder. I've been for many years, but so I want to just get that out there. But having said that, Scott, the one thing that you always look at when it's one good quarter after another, are we getting ahead of our skis? Is this running too far, too fast? Is this reminding you of the internet boom, for example, back around 2000? What do you think?
Neil, we are sprinting, and I, too, have come up with many great ideas over a Grand Slam breakfast, including this garb today, and it's paying off immensely, not quite to the billions that Nvidia is creating, but to your point, Neil, this is like the internet boom, my friend, but you know what's great about that? Last time I checked in the mid-'90s, late 90s, when the internet boom was really starting to get going, and then obviously the early 2000s, some of those companies, yes, Neil, went bust. Some of them went to the moon, and I think Nvidia is about there. I mean, Nvidia third market cap as far as trillions of dollars in the U.S., probably going to be the number one company in market cap here is my prediction by the end of the year. And one, too, that is delivering what the CEO said about the next industrial revolution, the AI boom, the servers, the storage, all those things that it's doing, the chips. Those are things that are going to transform what we're doing daily for our lives. And therefore, that's something that everybody, like Susan pointed out, should be excited about as you go forward in this stock market as far as buying these companies that are changing our lives going forward here. That's why you need to own the stack, and that's why we do it.
You know, Larry, to that point, I mean, those of a certain memory, and I looked at the internet boom and whether it repeats itself, I always argue the difference here is that some of the primary players make money hand over fist, and the demand is real. The reason why Nvidia makes so much money is companies are scrambling to get its chips, even if they have to wait a while to get the new chips that are the new popular thing. So I get that part of it. But again, looking at the multiples on Nvidia, looking at the multiples on some of these stocks from Meta to Microsoft to Amazon to Apple, I know they're all over the map, but when you have strong earnings for a company, those multiples come crunching down. And in Nvidia's case, it doesn't look so lofty. Microsoft's case doesn't look so lofty. So where are you on whether it's an index that's a bit too rich?
You know, just like the internet boom, as Scott was saying, you have the haves and the have-nots. You have the old economy and the new economy, right? And the new economy is Nvidia, but it's also those big tech giants. It's Google, it's Meta, it's Amazon. These are the dominant companies. And what we saw with the internet revolution is sometimes the old economy actually can be a better investment, a better way to play the new economy. Look, what powers those data centers that's powering AI? It's utilities, right? It's coal, it's nuclear that you need to power, that Microsoft and Amazon are using to power those hungry, energy-rich data centers. It's copper, right? It's industrial manufacturing equipment. So sometimes those are the better, more sane way to play this AI revolution. Look, even in the market today, you see this divergence. You see the Dow weak, but you see a handful of tech stocks very strong. Even the second-tier tech stocks can't compete with Nvidia. And I think there's lots of ways we can play this. There's going to be a massive productivity innovation wave that comes out of this, but you've got to look at things like utilities as the way to play it, not chase just multiple rich companies that's a one-shot deal.
You know, you mentioned utilities, and your intent was not obviously to mention the utility average, but I had noticed, Scott, not to wander afar here, the utilities are doing great. They're having a great year. So I guess by saying that the Dow notwithstanding today, almost anything you've been throwing money at, you had a chance to make money off of it of late. What do you make of that? There's kind of have to be a sorting out process here, right?
Reminds me of '99. Isn't that amazing when you can do that and you wake up tomorrow and you've made money when you didn't even know what you were buying? I mean, hey, this seems like
we're back to a day and age where yellow jacket would be fashionable. So
I think it may still be. We'll find out later. But I'll tell you what, Neil, what could possibly go wrong from here? And I mean, Larry makes a good point. I mean, there's a lot of things on the back end of this boom that could be good. And utilities, you're right, Neil, have been benefiting from maybe the fact that interest rates have stabilized. It's a more stable kind of cash flow business. So that's something too that could be better for the investors as they don't chase valuations here, because you're right. Nvidia is an expensive stock, but it's expensive for a reason, and stocks can get more expensive before they crash. So as you add these things to your portfolio, I think as Larry said, and the points are so prescient, he might be powered by AI, because you've got to add things that are going to be safe and stable along with these risky things like Nvidia, Microsoft, Amazon, and Google.
You know, the market, I know Larry climbs a wall of worry, and you've always reminded me of that. But some of the big worries are what's going on abroad. Some of the big worries are what if the Federal Reserve doesn't cut rates? What if, Washington, D.C. blows up because they're at each other's throats all the time? It's always been out there, but it's always a worry. What do you make of it?
Look, Nvidia is the great patriotic all-American growth story that we should be so proud of. But let's not lose sight that even AI and Nvidia can't overcome the inflationary concerns that are lingering over the market. Even today, with the industrial data, the purchasing managers information, you have retail sales that are weak, you have housing data that's weak. So all of those are a victim of runaway government spending. And there hasn't been a peep in this election cycle about really dealing with the elephant in the room. That's not Nvidia. That's actually the national debt that's going up by $1 trillion every 90 days. So we've got to address that issue if we want to keep this innovation boom that everybody loves in this country. And you don't want to see how the sausage is made, but you've got to deal with the realities of that, because those inflationary concerns are not going to be overcome by this productivity boom that we all love in AI and innovation technology.
Very good. Gentlemen, I want to thank you both. Always good catching up with you. And you're both splendid dressers, which I do appreciate. Speaking of splendid dressers, one of my favorite people here at Fox is Brian Yennis.